The collapse of a major Baltimore bridge and its knock-on effects could result in the biggest ever marine insurance payout, the chair of insurance giant Lloyd's of London said on Thursday. Analysts have forecast that insured losses from the disaster would amount to a figure in the single-digit billions, after a huge cargo ship crashed into the Francis Scott Key Bridge on Tuesday. 6 people were presumed dead. We're beginning to deploy resources in anticipation of this being a very substantial claim for the industry. And for the Lloyd's market, it's going to take some time for the complexity of the situation to unravel. Bruce Carnegie-Brown told CNBC's Squawk Box Europe. So, it's very early days to call a number. I don't at this point anticipate that it's outside our realistic disaster scenario planning. It feels like a very substantial loss, potentially the largest ever marine insured loss, but not outside parameters that we planned for. Lloyd's is one of the world's biggest reinsurers, businesses that provide financial protection for insurers who cannot handle the scale of losses incurred. Carnegie-Brown added that, while there would clearly be claims for the ship, cargo and the bridge, it is second-order impacts that would become substantial. A lot of business is going to be interrupted. Supply chains are going to be interrupted by ships that are both trapped inside the port and, of course, ships that were trying to gain access to the port that no longer can, and those second-order effects will take some time to work through, he said. Baltimore is the 11th biggest port in the U.S. and the country's busiest for the import and export of autos and light trucks. Supply chain operators are scrambling to minimize the impact on trade. Morningstar DBRS analysts said in a Wednesday note that insured losses could total between $2 billion and $4 billion, depending on the length of time that the port is blocked. Such a figure would surpass the current highest amount, which was paid out from the capsizing of the Costa Concordia cruise ship in 2012. Various insurance policies are likely to be triggered across marine liability and hull, property, cargo and business interruption. Despite the hefty insured losses, we expect they will remain manageable for the insurance industry as they will involve a large and diversified pool of well-capitalized insurers and reinsurers, Morningstar said. Barclays puts the potential insurance claims between $1 billion and $3 billion. The Singapore-flagged container vessel was chartered by Danish shipping giant Maersk and was carrying its customers' cargo, but it was operated by charter vessel company Synergy Group. Early reports suggest the ship lost power before hitting the bridge. Investigations will be carried out by authorities in both Singapore and the U.S. to establish legal liability, as part of a complex process that could take months or years.